Hey everybody, and welcome back to another episode of the Indy Investor Pod. I am ready to jump into this conversation, and that's unique for me to say like, hey, I want to talk about property management because that's one of the things I'm usually like, no, don't want to deal with it. I'm going to hand it off to a third party and that kind of thing. But no, I'm excited to have Jeremy Tallman on here with me today, president of T&H Realty Services. They're managing right around 1,000 doors, probably a little plus that and a little bit more and things. So investors out of state, out of country, kind of all over the place, all around central Indianapolis. So Jeremy, first of all, thanks a lot for joining me today, brother.
Yeah, it's great to be here. I appreciate the opportunity.
Yeah, no problem at all. So you're one of those people I consider a unique blend. Cause like I said, like on that, at the beginning of the show, I said like, man, property management is one of the things I am not gifted at. It's one of those things I would much rather hand off. Now, granted, in our business, I'm usually only managing properties that I'm picking up properties that there's some kind of it's a tenant issue or a house issue. So I got to problem solve it. So I'm dealing with a lot of issues with that and stuff like that. Now you're managing a lot of doors. You and your team, I'll say, we'll give your team some credit in there too, right? So you guys are managing a lot of doors and things, but first of all, give us a little bit of your background. So how did you get into real estate? And then how did you get into like, hey, yeah, I want to manage properties and work with properties and tenants and all this stuff?
Yeah, well, it's been a journey. I mean, my business partner and I, Scott Hallberg, he and I started buying residential real estate back in 2000. So we both, he's my brother-in-law, and we both have had a desire to buy rental properties. We like that idea. I think probably like 90% of the population, it's intriguing to own rental real estate, or real estate at some point. And so we finally decided back in 2000, let's start buying some rental properties. And originally we were like, hey, let's buy one a year. Let's just buy one a year. We had full-time jobs. It's something we could do. We could both join together and put a down payment and we can try this out. So we bought our first property, and I think in November of 2000, right down the street from our offices here on 52nd Street. And it was a unique story where it was an estate deal, I believe, if I remember right. The family gave us access to the property to start showing it prior to closing, which I would never recommend in today's environment, but we did back then. So I literally went from the closing table to the property, signed a lease with a tenant we'd procured. And I thought, wow, this is really easy. Like, this is simple. I mean, I of course had a completely wrong idea about it. It just worked out that way to start. So we kind of got the fever and started buying more like one a month, and then, built a nice inventory, a nice portfolio of rental homes. Well, a couple of years later, we got really invested into the buying and selling. We became regulars at the sheriff's sale. Really enjoyed that, buying homes, fixing them up, selling. Around that time, we started separating ourselves from our full-time jobs and becoming full-time real estate investors, and in the meantime, managing a bunch of properties as well. And as our buying and selling business got bigger and bigger, the rentals became kind of a drag on us, frankly. It's like, I don't want to do a showing. I don't want to have to deal with a maintenance issue. I don't want to have to deal with, collecting rent, things like that. Just didn't excite us necessarily when we were buying and selling. So we looked to outsource that. And back then there were just a handful of management companies, totally different than it is today. Yeah. Couldn't get comfortable with anybody. So we kept on managing. And then around 2013 decided there's a big opportunity here. 2007. I'm jumping ahead. Yeah. 2007 decided there's a big opportunity here, and formed a third-party property management company called T&H Realty Services. And since that time, the last 15 years, have grown the business every year. And several years ago, as I'm sure people got the real estate fever. Buying and holding became a big deal. And Warren Buffett was a big part of that when he said, hey, let's go buy a few 100,000 single family homes. And so we saw the corporate REITs come in, dominate share of sales, and they were there to buy and hold, and they did, and they have. And it's propelled our business. I, at one point, thought it was impossible to get above 400 units in Indianapolis. I didn't think that market could sustain a property management company more than 400 units, but we have a whole lot more rentals in the market today than we did back then. So it's just changed, and we've grown and adapted, and really enjoy it. I'm like you. At one point, never thought wow, I really want to be a property manager. Like that just, it really excited me. But today it does. I like all aspects of it. Because we help people buy, we help people manage, obviously is the bulk of our business. We help people sell when they're ready to do that, which a lot of our clients are selling
Yeah.
because frankly they can, and they can sell for a lot more than they paid for it a few years ago. So
Yeah, definitely.
that's our
So
story.
awesome, man. Yeah, thanks for sharing that. I really appreciate that. And coming back to what you're saying is like, with Indianapolis, you're like, okay, we have about 400. I don't know if you can really sustain more than that. And it's growing, and it's not just you having success with it. There's other management companies
Oh
out there
yeah.
too that are managing big portfolios as well. So why is Indiana? I get asked this all the time, and I always give my answer, and I'd love to hear your answer on this. Is like, why is Indianapolis such a great market for those buy and hold investors that want to pick up the properties, bring on a third party property manager and have them manage and stuff like that? Like, why is Indianapolis so attractive for that?
Well, I mean, it's the same stories you've probably heard over. I mean, we're still relatively affordable. Um, cap rates used to be a big deal here. You could do 10, 12%, whatever it might be. That has shrunk a lot, and people have to deal with that. But we have a good base of rentals, a good market rather, for people that want to rent properties. We have a heavy amount of our population is blue collar, and they rent homes. And so it's just a good combination of things. I mean, it's one where a lot of the REITs, this was one of their first stops because they knew it was just so affordable.
Yep.
We have other clients that have come in and they may have sold a home in Arizona, or a group of homes in Arizona, sold 5 homes, and they can buy 15 here.
Yeah.
So it's still an affordable market. It's getting less affordable. Some of our clients we've had a while, it's like, wow, I used to buy in that neighborhood for 85,000. Now it's 140. What happened? Well, things went up, and Indianapolis historically has just been a very steady market. It's never seen huge appreciations historically, or big declines necessarily, but over the last few years, we've seen it. I mean, some of the properties that we own personally and that we've managed for a while, it's just, I get sticker shock almost every week when I see what homes are selling for, what homes are renting for. We're just going up. That's the way it is. And so.
Yeah, I mean, Indianapolis has just been known as that, steady Eddie market of like, hey, you're not going to have that huge appreciation. You're also not going to have to really worry about that huge depreciation or anything like that, because it's going to be pretty steady. But what we've seen over the last couple of years, we actually have had that appreciation, and it has done well and things like that. What's your projection on that? Do you see it holding, or that's the way I kind of look at it, as like, I feel like we've kind of caught up with some of the other markets, like a Columbus of Ohio or something like that, where I'm like, hey, I think we're, compared to a lot of these other markets that were maybe a little smaller than, we're about where we should be. So I kind of feel like it's going to hold around these markets, maybe drop off a little bit, but I think we're going to hold at these prices. What's your opinion on that?
Yeah, I don't think we're in a bubble. I mean, I don't think we're in that space that we were back in 2008, 2010, where, frankly, the CP Morgans of the world were overbuilding, and they were building a bunch of junk, and the subprime market really, the lenders really hurt that segment where, we saw some prices go down, and because we had a lot of inventory, and it was a great time to buy in hindsight, right? I mean, you think about that, you buy when homes are plummeting, and it's a scary proposition, but boy, wish we would have, there was a lot of opportunity back then. But anyway, I think people ask that a lot. It's like, are we on a bubble? I don't think we are, because it's just a supply issue. I mean, we just don't have enough homes, whether that is for people to buy to live in, people to buy to rent, whatever it is. And builders have got to get caught up. And as a result, prices are going to continue to increase. I mean, but you're right. We're still not seeing, I was looking at some statistics yesterday, and it looks like Indiana had a 9% rent increase between 20 and 21. That's heavy. That's a lot for Indianapolis and in the Indiana area, but it's nothing where some other cities have seen 30, 40, 50% rent increases. I've talked to other management companies, and I saw one yesterday that said, their rent increased 15% year over year. And 9% is a lot for Indianapolis. It's a lot anyway, but I don't think in 2 years we're going to see a decline in rents by 9%. I just don't see that. I think you're right. I think we've kind of reset with some of our peer markets to where prices are consistent across, more consistent with those markets.
Yeah. That's why I always, we'll have the investors, standing or, coming out and saying like, oh, I mean, I'm going to wait till it drops a little bit. Or I'm going to wait till the bubble hits and things like, you want properties. I think you need to pick them up
You got to
now. Like
go.
it's going to be there. I think
Yep.
it's going to continue to increase a little bit and stuff still. So
Yep.
if you want some
Yep.
properties, pick them up. So I want to go back to what you were kind of saying is like, okay, so for a while, you and your brother-in-law, Scott, were, you guys were self-managing and realized like, hey, I don't want to go on the showing anymore. I don't want to do this. And it was kind of time for you to like bring on that third party property management company. You guys ended up designing that or building that yourselves
Right.
and stuff. But I think that's always a question for investors of like kind of when to do that. And, some people want to bring on that third party person like right away. Like, I don't want to manage it all. Like I want to be hands off and stuff like that. Or you have that person of like, I think I can manage for about the first 5 properties or the first 10 properties. Or what's some advice you have for somebody that's kind of in that phase of like, when is the right time? And I know it's different for everybody, it's case by case, but kind of when are those first signs of like, hey, it's time for it to stop self-managing and turn it over to that third party? Or also on the other end of that too, you have that time where it's like, hey, maybe it's not affordable for you to do third party and you should try to self-manage because your portfolio is so big and you can build your own team. What's some advice you have
Right.
for those investors out there like that?
Well, I mean, as you can imagine, I think over 90% of our clients don't live here.
Yeah.
So logistically, it can be hard to manage a property from across the country or even just in Ohio from here. There's technology that can allow you that can help that, but being here does matter.
Yeah.
So I think some people just are like, I just can't practically manage it, whether they own 1 property, 5 properties, 10 properties, whatever it is. It just logistically, it doesn't make sense for them. But we do have a lot of people that live locally and could do it. It really comes down to what you want to focus your energy on.
Yeah.
Right. I mean, because a lot of our clients, they don't do this as a full-time gig. Our largest client owns like 23 properties.
Yeah.
And we don't represent large corporate, entities. So these are people that work hard at their day jobs. They like to have real estate because I think it's a good investment, which I totally 100% buy. I think it's a great way to build wealth. So they realize, look, I don't have extra time to manage this. I've got to attend a soccer game on weekends. I've got to, whatever it is, it just doesn't make sense for their time. It's what they value in their time and what their time is worth to them. So, yeah, I mean, but I will say this, I think the statistics show that more than 60% of investors self-manage still.
Yeah.
So we look at that as a property manager and just go, well, there's a ton of opportunity for us because there's a lot of people that self-manage and, can we convince them or persuade them to use a third-party property management? But I will totally 100% agree with the people that self-manage. In some cases, they can save money. They will.
Yeah.
I mean, they can't do the things that we can do as well as we can do. It's kind of like investing in the stock market. You could open up an account at Ameritrade or whatever it's called now. And, you could buy a bunch of stocks and you could invest time in researching those stocks and buying and selling or, whatever you want to do and invest your time in that. You may do well, but you could also turn it over to a financial advisor and say, look, I'm going to send you money and you invest it and I don't want to have to deal with it. I trust you to manage my investments and give me a decent return. I realize that sometimes things don't always work out. Right. That we have bad days in the stock market. Our stock market recently has just been extraordinarily volatile. I don't blame my stockbroker for that, or my financial advisor. I just, I realize that it's an investment and it's passive and I want to make it passive. So, but yeah, I mean, look, self-managing people, I respect them. I think, it's a lot of work in some cases. If it can be very successful for people who self-manage.
Yeah.
But ultimately it comes down to how you value your time.
Yeah. I really like that answer. And I think it's really important. And I'm glad you mentioned that of just like, how do you want to spend your time? Because you look at like kind of just the different aspects of it of like, okay, do you want to self-manage or do you want to find properties? Maybe you can, spend your time doing that, or do you want to find money? Have somebody else find your properties for you. You want to find money and things because you're going to need to be doing one of those things yourself, or you're going to have to, building that team to do all those things and stuff. Right. So I think it's a great answer. Like, yeah, how do you want to spend your time and where do you want to spend your time too? So yeah, awesome stuff. I know one of the most popular, kind of debates and things I talk about with a lot of investors and a lot of other property managers too is, we'll have people, sometimes you'll hear about an investor of like, I've used like 3 or 4 property managers. I'm going to fire my property manager. I'm not happy with them. And I love to see, kind of some of these conversations is where I always like to bring it is like, well, how did you guys work together? How did you manage your manager? How did you
Right.
onboard your manager? All those things.
Mhm.
If I'm bringing on an employee to my team and it doesn't work out, that's on me a lot of times because I didn't hire them correctly or I didn't onboard them or train them correctly. So
Right.
it's kind of the things, same things with a property manager. If I'm bringing on a property manager, what are some things that I could do as an owner to work with you, to set myself up for success, and really kind of help myself manage you guys as well?
Well, it's a good question. Managing the manager is something that I hear quite a bit. I think to me, it's a partnership. We look at our
Yeah.
clients as partners in what we're trying to accomplish. I mean, we are 100% focused on making them successful because at the end of the day, if they're not, then we're not.
Yeah.
I mean, that's a short game, right? I mean,
Mhm.
so you've got to build that trust with clients, and it's got to be, I know it doesn't happen automatically. Um, that's one of the things we've really focused on as a company is we obsess over our customers' questions. Like we want to know what are you as a client thinking about? Like what are your fears? What are your pain points? And we put it right on our website. We have hundreds of blogs out there. We have a lot of content. Our website is hundreds and hundreds of pages deep because we want to educate people. That's our biggest obstacle, and I think it's a new investor's biggest obstacle is just really understanding what they're getting into
Yeah.
by being a landlord. So we try to educate them as much as we can through the sales experience. We nurture them through educational campaigns throughout the onboarding phase. The first several days they're with us. We get them with a property manager that they can be comfortable with, and that will guide them through any make ready work and things like that. It's a high touch business is what
Yeah.
we're in,
Yeah.
and the more we can touch our clients, the better. Now, I also understand that everyone's different. So if you're a client that says, "Hey, I want daily check-ins, I want this and that," most management companies won't work. That's not going to work for most management companies. They're just
Yeah.
not set up to deliver that type of touch. But if you can have a portal, for example, that's got reporting, that's dynamic, that's not, that you can see when rent's collected at up to the minute, creating that transparency and openness is so key. And I think it's ultimately comes down to a conversation to see if you're comfortable or not.
Yeah.
Reviews matter. There's a lot of reviews out there. Management companies, it's hard to get good reviews because we're literally the proverbial referee in some cases. But between that tenant and owner, it's just really just making the call, getting comfortable with a property manager, and of course, understanding the basics like the fees and stuff like that. But that's what it comes down to is just because, yeah, we've talked to people. It's like, well, I worked with management A for a year. I worked with management company B for a year. I'm just, no one's responding to me. I've had 3 evictions, whatever. It's
Yeah.
just, can be problematic. And for us, we guarantee nothing. We can't guarantee anything because
Yeah.
we're dealing with human beings and market conditions, which we can't necessarily control. So again, I think it's educating, getting comfortable, and then really you have to trust them. I mean, it comes down to trust that the management company 100% has, legal and fiduciary responsibility to act in your best interest. And I think most companies do. There's some exceptions to every
Yeah.
industry like that, but I think most companies want to work in their client's best interest.
Yeah. Are there any when when you or your team is sitting down with that new owner that wants to, use you guys for property management or anything like that, what are some questions that they should be asking? Is there ever a time when you're like, okay, we're doing this and it's going well, but man, they really should be asking about this. Or why hasn't this come around? What are some of those questions that, if I'm a new owner and I'm want to use you guys or another property manager, what are some questions that I maybe should be asking?
Well, I'll say this, a question we get a lot is how long will it take you to rent my property?
Yeah.
You know, well, my answer is typically that depends. Are you going to listen to our rent rates? Are you going to allow pets? A lot of owners say, well, I don't want to allow pets. They'll destroy properties. That isn't necessarily the case. It doesn't necessarily prove out with just statistics. But if you allow your property manager to market the property the way they feel fit, then they should be able to give you data on how long it takes to rent the property. But the other question that needs to go along with that is what's your eviction percentage? Like how often are you evicting? Because a management company can fill vacancies very quickly if they want.
Right.
There's the market's good, right? Today, as we're speaking, the market's not so great. The rental market, it's slow. It always, we've had some winter blues here, but it's going to pick up. But management companies can fill properties quickly if that's all they're interested in doing.
Yeah.
They notice I want warm bodies in there, someone that can fog a mirror. Let's get them in there. Let's hope they pay rent. But so they can have really good days on market, but they could also evict a decent percentage of the properties, and that's devastating. Evictions are just a devastating event. We consider them serious adverse events, and we feel like we have totally failed when evictions happen.
Yeah.
So that's eviction percentage is key, because nothing will kill your cash flow like a vacancy will. Compound that with an eviction, it's double, because probably you're left owing rent. There's been very few tenants in my experience that have ever left a property in great shape through an eviction. So there's just all that. There's more days on market. There's, more vacancy that way. So it's just, eviction percentage is key. How are you going to communicate with me? Like, what should I expect from you guys? Like, how often will I receive rents? How soon will I receive rents? Team structure. How do you handle maintenance? Do you have a maintenance department? Do you outsource? Things like that. Of course, you have to understand fees. That's basic.
Right.
Fees should be out there. And I don't understand why management companies don't put their fees on their website. I always just like, why wouldn't you do that? That's literally the first question that you're going to get asked. Pricing pages are just, I'm sure if you shop online, which everyone does, and there's no price there, call for pricing, that annoys you. I'm sure it does.
Be proactive, put it out there. Right. You're going to get asked about to have that conversation.
You're going to get asked about it.
It's a disqualifier, or a qualifier or disqualifier, really. So
I find it extremely annoying when I have to call for pricing. I'm sure, but just getting those basics down, just trying to establish that relationship and understanding what they're about. We get the standard form questions where people write in and say, hey, here's 25 questions that I got from Bigger Pockets. I'm told I'm supposed to ask you guys. So here they are. Pick up the phone. Let's have a conversation. It's much better that way. Yeah. So
I really like that question of the eviction. What is your eviction rate, and how many have you been through, and things like that? Just because, coming in and doing some business coaching and consulting and stuff like that, I realized that, like, hey, it's not necessarily about what you make, it's about what you keep. Yeah. Same thing when it comes on the property manager side. It's not about how many tenants you place. How many tenants do you actually keep, and what's that look like, and how's that going? So yeah, I think and one of the things I always like to bring up with owners and property managers as well, I think a lot of times owners sometimes forget that really what you guys are that intermediate, or that conduit between the owner and the tenant. You guys represent both, and you guys are there for both. It's not just like, hey, you're just working for this owner and the tenant's got to do whatever the owner says. You're there to kind of combat and kind of really work with both of those things. So what's some advice for you when you kind of think about that, and owners wrap their minds around that, of like, that's what you guys are doing. You're there for the owner to help them out and do everything you can for them, but also for the tenant, and to stand up for the tenant, to look out for the tenant and things. So what's some things that you think of, or what's some advice you have for owners that maybe don't quite grasp that concept?
Well, I'll say this, it's the relationships are different. I mean, we have a client relationship, agency relationship with our owners. I don't want to get all nerdy and legal with you, but we have a higher level of responsibility to our client client rather, than we do our tenants. Our tenants are our customers. So we owe them honesty, fairness, responsiveness, communication, things like that. But we owe a higher degree of level of confidentiality, things like that to our clients. There's just, statutory and rules, legal rules that we have to follow for our clients. So we are acting in our owner's best interest. As agents, we're required to. But at the same time, we have statutory requirements in terms of maintenance that we have to fulfill. Mm-hmm. Right. So if a heat source goes down, it has to be fixed. It's not I'll wait till I have money to do that. Right. I mean, it's got to get fixed. So there's certain statutory requirements that we have to uphold so that we don't violate our lease, much less Indiana landlord tenant law. Yeah. So we do follow all that, and we have leases that support that. And we have management agreements that support that as well, that we have authority to act if there's an emergency. Then we have to react because we have statutory requirements. No one wants to get the health department called on them, because the health department can come out for a no heat and then find 15 other things that all of a sudden the owner's required to fix. Yeah. It just creates a disaster for people. So we want to have a high level of service, not only for our clients, but also for our tenants, because that will help your renewal rate. That helps the client. We love renewals. We celebrate them. They're important. So we want to keep that tenant happy. And, maintenance is one of the main reasons tenants choose to either not renew or to renew. If they feel like they're being taken care of, if they feel like the rent's fair, then unless they've had a life change or they have to, move, or a family member, added to their family and need more space, they're probably going to renew, especially in this market.
Yeah. So no, I love that. I love that way that you put that too. The owners are the client, the tenants are the customer, and stuff like that. It's a great way to kind of think about that and wrap your mind around that. So I love how you put that there. So I want to ask you too, just like now that we're, almost 2 years into COVID and everything that's going on and all the restrictions and all the things that happen with that, of like, what state do you feel like that we're in right now of like, hey, can we do evictions, or we still have some hangover from that, or kind of what's going on? Is everybody paying now? Like kind of what state do you feel like just central Indianapolis or central Indiana is in right now with that?
Yeah. So, I remember when March of 2020 hit and shutdowns happened, and we shut our office down and working from home. And I'm like, I go on these forums I'm part of with, some national property management groups. And there was a lot of fear out there. It's like, what are we going to get? 80% collection, 75% collection, some guy 50% collect, what are we going to get? Well, we never really experienced that. Single family property managers really throughout the country didn't experience a huge reduction in collected rents. Now we had to get real flexible and real creative and real communicative with our tenants and our owners too. We were doing like weekly videos to our owners, like, hey, here's what's happening, here's what the laws are, all this stuff. So yeah, we did more payment plans in the last 2 years than we've done collectively in our entire history, because we had to be flexible that way. But still at the end of the day, when the moratorium was finally lifted, we hardly had to evict anybody. I mean, it was a very small amount of evictions. And today we can evict. But there's a lot of money in this economy right now. We see that with inflation and, all the stimulus packages that came out, and this time of year is great because tax returns come in, and we always typically we have a lot of segment of our tenants that pay in advance because, hey, I got some money here. I'm just going to go ahead and put it to you guys and have my prepayment account. Those are awesome tenants. So no, I think the market's fine. I mean, again, it was stressful. There was an enormous amount of work, just, keeping your staff, making sure they're healthy and engaged, and working from home, and, Zoom became a way of life, just like any other, businesses that, are out there that went through that. But I would say today's climate it feels fairly normal.
Nice.
I think our rent cycles are still a little out of whack when Indianapolis is very seasonal, the rental market and the housing market. The housing market, I don't think is much anymore. Seems like there's always buyers out there 12 months out of the year.
Yeah. The last 2 years, December's been one of our best months.
Yeah,
it's just,
absolutely. It is. And our brokerage team was commenting on that the other day. It's like normally, we really have opportunities in the cold weather, but boy, it's still just so competitive out there. But I think our rent cycles are a little out of whack. January historically has been our busiest month as far as rental applications go.
Wow. Okay.
It's like people are I don't think they get through the holidays, and all of a sudden it's like, okay, New Year's resolution, new home, whatever, I want to go. Yeah. But the last 2 years, January's have been slow. And I think that's some COVID effect where, kids were homeschooled, remote learning rather, and things like that. So people just weren't moving as much. And so we'll see how these cycles work out. March will be insane. It always is, the springtime. Yeah. But for the most part, I think things are fairly normal, I would say, on the rental front.
Yeah. You mentioned that during COVID and during that time and stuff like that, you guys had to get creative and had to be maybe a little bit more communicative and stuff like that. And I know with us on our team, like we realized, like we saw some holes in our processes and systems and stuff like that we had to shore up, and we changed some things. Is there anything like through that with, on the business side of property management, you guys realized that like, oh man, why weren't we doing this all the time? Like this is really great for our owners, or really great for our tenants. Is there anything that came out of that was like, man, this is awesome, let's keep doing this?
Well, yeah, I mean, I'll say this, not to toot our own horn, but we didn't have a lot of missed beats there.
Yeah.
Because, we were set up several years ago with remote showings already. I can't imagine. And I actually experienced this with a property near where I live that sat vacant for about 10 months because this management company couldn't do showings. And so we were set up remote, with Rentley's who we use. And so showings just went on as normal.
Yeah.
So I would say the biggest thing though, and it's something, one of our core values is, to be great communicators. And we became great communicators back then. We had to. Like our clients were just, in some cases, very unnerved by the whole situation. Yeah. There was a lot more communication going back and forth. So it made us just say, look, our clients, some clients want us to communicate with them every day. Some clients have never probably read one of our emails or watched any of our videos because they're just like, here are the keys, do your thing. I'll see you guys in 5 years and I want to sell it.
Yeah.
Others are not like that. But I'd say the biggest thing for us was, communicating. And from a staffing standpoint, people, it was just, it's hard for people, for parents of young kids to have to work from home that way. It's, it becomes a struggle, but, you just have to have a lot of patience and in some cases trust that, we're getting our jobs done. So.
Yeah. Awesome, man. So no, I really appreciate your time on here, and I really appreciate you and the insights you brought and things. And before we get out of here today, I want to give you a chance to toot your own horn and talk about who you guys are, what you guys do, and what you guys do well, and why should somebody work with you, or why should they reach out to you and connect with you guys and see what you guys can offer them?
Well, we're really upfront. We're not for everybody. I mean, we totally realize that we don't try to take on all properties, all clients. We're going to interview you just as much as you interview us, because at the end of the day, we want to make sure it's successful for both parties. Because if we get into it, and there's been some misunderstanding of how we do business, then that just creates friction for the whole process. And we're disappointed, you're disappointed, things like that. So our specialty is single family homes that command typically, more than $1,000 a month or so in rent. Our average rent's about in the middle 12s, 1250, 1280 range, something like that, which happens to be the average for Indianapolis. So we're kind of right in that bread and butter type area. We are taking on some multifamily stuff. We don't want to have a situation where we have to do on-site management. We're not set up for that. We realize we want to stay in our wheelhouse there, but we're doing some small buildings, things like that. We like those. I think they're hard to buy, frankly, like anything else, but that's what we focus on. But really, we just want relationships where there's mutual trust, mutual respect back and forth, that, we're acting in their best interest, that we really want our clients to treat this as a small business for them. Like, you are entering, when you buy a rental piece of real estate, you are entering into a small business, whether you choose to believe that or not, where you have customers, your tenants. Now you don't have to deal with them directly because we'll do that for you. But, we really want people to value that this is a business. I want to treat it like a business. Yeah. And then really, I think the key to investing, and I preach this all the time, if you're looking to buy rental real estate and treat it like an annuity, then you're probably going to be set up for some disappointment. Yeah. Because, I've had a lot of investors over the years come to us and says, well, look, I ran a pro forma and I was supposed to get $400 a month. And I see I've only gotten $360 a month or $350 a month or whatever it is. And I'm like, yeah, that's pretty good. Because for us, investing has always been a long-term play. Like we look at it as a wealth building activity, not a day trading, cash flowing machine through single families. That just doesn't really exist unless you can build a tremendous amount of volume, whether that be through multifamily or a large amount of single family. So, realizing, our investors, because if you're an investor that came to us 7 years ago or 10 years ago, whatever it is, and you bought a property, and let's say you made zero cash flow through the whole thing, it was a net through, your taxes, whatever, and it ended up being a zero net neutral cash flow proposition. You're worth a lot more today than you were back then because your investment has went up significantly. So we've always had that personal philosophy. We try to instill that into our business, that a lot of the rental properties that we bought back in 2000, 2001, 2002, we still own. Yeah. And my biggest regrets are the properties we've sold, not the ones I bought. Because I wrote a blog a while back about our big real estate mistake where we Scott and I got our numbers crossed at a sheriff's sale many years ago and ended up paying 19,000 more for a property than we thought we were paying. So I got homes confused and I bid on something and totally screwed it up. We looked at each other like, oh my God. But we couldn't sell it, couldn't flip it because we didn't have any margin left, but we kept it and we still own it. And that property, I think we paid 75,000 for it and it's worth probably 3 times that much now.
Yeah.
And so it's like, that mistake, was that really a mistake?
Yeah.
You know, so looking at it as, again, a long-term wealth building experience, not obsessing over, well, I have a cap, I'll pay up to 130 for this property. You could probably pay 132, 133 and be just fine, you know?
Yep.
And so it's making that leap to say, don't overanalyze it. Just,
if
be brave.
If you're a true buy and hold investor, like you're gonna, it's about the long play and it's gonna work out and things are gonna be okay. So awesome. If somebody wants to reach, oh, sorry, go ahead.
Yeah, I was going to say, you know, our website's loaded with information. We have a lot of people that just come to our website that'll never be clients of ours. Yeah. Maybe we don't manage properties that, you know, meet their criteria or, you know, or we're just not a good fit from a philosophy standpoint or whatever. But we do try to put a lot of information out there. We have a weekly blog and, you know, it's all about content for us. It's just building that content and making sure people know what they're getting into from our perspective. Everything we do, how we do things is out there. We hide nothing. Our entire playbook is on our website because we want people to understand it, you know, well in advance. So yeah, you can hit us up at our website. We're social. We got, you know, all the normal social networks and things like that. So we're happy to have conversations and see if we're a good fit.
Awesome. Well, and what is that website and where can they get to find that?
It's www.threalty. I'll spell realty because everyone spells it reality. It's REALTYINC.com. So threaltyinc.com. You can get to it through Indy's Best Rentals as well. It's sometimes easier to find. It's just Indy's Best Rentals. But yeah, it's out there. Great information. So if you don't make make a phone call to us, we hope you can benefit from the content because we work hard to put out really good content for people.
So awesome. Thank you so much, Jeremy. Really appreciate your time and your insights on here. Great content here that you brought to the show. So really appreciate that. So thank you everybody for listening. And we'll see you guys next time on the Indy Investor Pod. That's a wrap for this one.